For the last few years, one strategy has dominated almost every housing conversation. Just wait. Wait for prices to fall. Wait for a crash. Wait until the market resets. And on the surface, that sounds smart. Prices are high. Affordability is stretched. Monthly payments feel insane. So waiting feels safe. It feels disciplined. It feels like you're avoiding a mistake. But here's the uncomfortable truth that almost nobody talks about. Waiting for a housing crash can backfire badly. Not because prices can't fall, not because markets never correct, but because time itself has a cost. And housing is one of the few markets where that cost compounds quietly in the background. Today, I want to break down why waiting feels logical, why it often isn't neutral, and how people can end up worse off even if prices eventually come down. Let's be fair to the waiting strategy. Emotionally, it makes a lot of sense. Nobody wants to buy at the top, lock in a bad deal, feel foolish a year later. History reinforces this fear. Everyone remembers 2008. People who waited back then looked smart. People who rushed in looked reckless. So the brain draws a simple conclusion. Housing is overpriced. Time will fix this. I'll wait. The problem is that housing doesn't behave like stocks or crypto. You don't just click buy at the bottom. You need a job, credit approval, stable income, confidence, and waiting isn't a neutral position. It's a bet, whether you realize it or not. Most people evaluate waiting like this. If prices drop 10 to 15%, I win. What they don't calculate is what waiting costs them every single month. Rent rarely goes down, resets higher each lease, builds zero equity. Every year of waiting transfers more wealth out of your hands. There's also the time cost, delayed stability, delayed family plans, delayed financial leverage. And here's the subtle but brutal part. Even if prices fall later, your situation might be worse than today. Your rent is higher. Your savings rate may be lower. Your down payment target moved again. Waiting feels passive, but financially, it's very active. Here's the part that almost nobody connects. Housing crashes don't arrive in isolation. They usually show up after something else breaks first. Job market, credit markets, financial confidence. That means the moment prices finally fall is often the worst moment to buy. Banks tighten, lenders get conservative, down payment requirements rise. So even though prices are lower, access is worse. People imagine crashes as shopping opportunities. In reality, they're gatekeeping events. Only people with stable income, strong balance sheets, emotional control can take advantage of them. Waiting doesn't guarantee access. It often coincides with restriction. Another hard truth. Almost nobody buys the bottom. Why? Because bottoms feel horrible. The news is negative. Friends say wait longer. Social media screams doom. So people hesitate. They wait for one more price cut, one more rate move, one more confirmation. Then suddenly, prices stabilize, rates move, competition returns, and the window quietly closes. Not with a bang, but with a whimper. Most missed opportunities aren't obvious in the moment. They only look obvious after confidence returns. Here's the nuance most housing debates miss entirely. Not all resets happen through falling prices. Some happen through time. If prices go sideways for 5 years while incomes rise slowly, inflation erodes real values, rent continues climbing, affordability improves quietly. No crash, no headline, no emotional buy signal. People waiting for drama miss this entirely. They don't act because nothing feels like a reset, even though one is happening underneath. This is how many buyers get left behind without ever seeing the crash they were promised. Waiting can work, but only for a narrow group of people. It works if you have a recession-proof job, large cash reserves, flexible life timing, emotional discipline. For everyone else, waiting often quietly traps them in rising rents, missed life milestones, permanent postponement. Waiting is not automatically prudent. It's only prudent if you can survive the waiting conditions without falling behind. The biggest risk of waiting isn't missing a crash. It's normalizing inaction. Every year you wait, waiting feels easier. Ownership feels further away. The bar rises psychologically. What starts as caution turns into habit, and habit turns into exclusion. Not because people were stupid, but because they waited for certainty that housing never provides. So instead of asking, will housing crash? A better question is, what conditions would make buying better for me? Because housing decisions aren't made at the bottom. They're made when income is stable, payments make sense, life timing matters more than headlines. Waiting isn't free. Buying isn't reckless. Both carry risk. The real danger is pretending one doesn't. I'm curious where you stand. Are you waiting for prices to fall or waiting for life stability? And what would actually change your mind? Lower prices? Lower rates? Higher income? Drop your thoughts in the comments. I read every single one.